Good afternoon and welcome to the end of day review for today. And today is March 17, 2025. It is Monday, the first trading day of this week. And this week we are in week 12. And one more week we're going to finish up Q1 for 2025. So for this week we have the very high impact news of all impact news we have in trading world or in financial markets. This is the FOMC meeting. The FOMC meeting for this month is on. Is that right? March 19, right? You have 2 day, March 19th. Actually, the meeting start Tuesday, tomorrow, and then we're gonna see the decision release at 2 and then the Fed gonna have a meeting or conference, press conference at 2:30. Very interesting. We try to understand how to trade the FOMC meeting, but it's very tricky. We haven't seen any real pattern yet, or maybe we haven't looked deep enough, or we haven't looked on more data point enough. So basically for let's go to FOMC meeting. This year we don't have in February. We just have January and then nothing in February, and now in March we have it. So we're having 29 and 28 and 29. Let's see what the 29 we have. So we can see that how it's moving. So here's our screenshot on the 29th, where the FOMC meeting took place. That is the beginning of the day right there. All right, here's the FOMC meeting January last month, or last time, because we don't have February, so we skip February. So basically right here is beginning of the day. So you see that this is a down move right there. Yeah, a down move right there. And look at that. So here we have is before the market opened at 9:30. So yep. And then here's it at the end. No, it's at 30. So that's the end right there. That's the 29. And here is how it's. So at 2 o'clock it down move, and then 2:15, and then it's 2:30 it go up. So basically the 2:30 gonna reverse. 2:30 gonna reverse. $230 gonna reverse right there. So right here is 11. So 11:30. 11:30. Yeah, it's the second leg down right here. 11. It looked like. But right here is the right here is the all right. Now to look back on FOMC meeting last time, which is in January. Yeah, in January 29 is a Wednesday. So we see very significant at 2 o'clock. And then at 2:30 or 14:30 right there, we have already the setup right there. Break, you see that? Test from type 2. Test from above, break and reverse. That's type 2 right there. Very critical. We target at the 9:30 right there. So last time, January, the FOMC, very easy to trade. You can see that you can trade a short right here because you see right here the test from above, and you see all this candle, it is still in the range right there, and you see fair gap right there at break the 9:30 level, and then boom. So you can trade right here is the next leg down, and then you can trade reversals. So the FOMC on January, very easy to trade. On the month before that, which is the FOMC on December 18, which is last month, last year. So right there, that's the beginning of the day right there. So either it break the level that's set by this candle right there, right? Test from above, this is it, break it. Yeah, so level is about 61.59 right there. And at 8:30 we saw that it already go down to break the open 18-hour range right there. Yeah, this level right there at previous day right there. So by the time at 8:30, you see that we see the setup right there. You see that break, test from below and reverse. That's the type 1 reversal right there for 8:30. And then you go to the PM. You feel like it's gonna have. We feel like it's gonna have a reversal type 1 right here. That's what we document right there. You see that break test from below and reverse, but very, very careful here because we have a long weak test from above right there. That's means the down move is not finished yet. So don't go in right here, but if you go in right here, take a quick profit. We learned the same lesson for today. We're gonna show the trade we take for today. But here's at the 2 p.m. or 14 hour to the 4 minutes, you see that it break down into the open of 18 and also go down to the 9:30 right there. So that's a huge sell off right there. And here's at the end of the day. So you see that is the 2 right there and the 2:30. Last time we see that 2:30 is reverse. But this time the 2:30 is test from below. So that tells us that it may reverse at the 2:45. However, it become invalidate because the 2:45 go down and what? It failed to reverse and it break the low of the 230 right there. That give a signal that, the next leg down gonna be in place going short term. So very critical to pay attention after 240 and 245. 240 and 245. Let's see what the 245. Yeah, the 245 here doesn't do much, but right here the 245 here is huge out move. So basically, if 230 we don't see any, normally it's gonna be a huge move on 230. But if it's not, then watch for the 245. Right? But after you see the 245 is already make the major move, then don't go for the 245 because it's gonna be it's not gonna be expansion move. That's the whole idea. We want to catch the expansion move. Look at another FOMC meeting. This one back one more on November 2014. So here's the beginning of the day. You have a huge expansion. So we want to see if they kind of continue or gonna be reversed. So basically it continue. This is the open at 18 right there. And when we have the 930 open, right here is the 930. Yeah, 930 around here. 930 is open above 18. And it keep rally. And then when it go into the FOMC in the PM, we can mark this a non-expansion move, or you can call it consolidate right there. Basically, that's typical. So here's a little bit tricky right here. So in the 14, we don't see any expansion move. We see that normally the 14 is expansion move. When we look at other setup, you see right here, the 14 is the expansion move. But for November last year, it's not expansion move. So it's very unusual right there for a 14 is not expansion. Yeah, it's very strange right there. It have to be expansion move, but it's not at all. It's kind of consolidated right there. The same thing for the 40, 55, and then no, because the one is 30. I think we let's fix this one. It should be 30, 1430. This is 45, right? 40, 215, 230. Let's fix this real quick. All right, we just fixed the number. Yeah, so it's 230 right there. So normally you have a very expensive move, liquidity injection in the 14, 2 p.m. But in this case, not. The same for the 15, and then the same for the 30. Then watch for the major move at 1445. So if it break to the high of this one, definitely it gonna rally up. But if it break to the low, then we can short them. So that's the strategy there. So in overall, we just watch for liquidity, watch for watch for the level, right, and then trade accordingly. Especially if we see that there are a giant move on the 14, then maybe watch on the 30 that any kind of a setup for reversal. If not, then watch for the 45. So that's the general rule right there. Yeah, let's do something here. FOMC meeting, game plan right here. Yeah, it's game plan or So basically, if the 14 is expansion, and 1440 is non-expansion, then what? Then the 1430 it's gonna be reversal, right, or continuation. But we also have the case that the 14 is non-expansion, right? Expansion, we annotate E right there. Ooh. For expansion right there. And the same for 14, 15, basically the whole thing right there, 14, even the 1430. Then 1445 is going to be expansion. Yes, so that is the general rule when we try to trade FOMC. So let's recap this. Okay, set up right here. Expansion, then look for. Okay. So right here for third two expansion and 4. So the 45 right here is expansion. Okay. Yeah. Yeah, one more note right here. So if the 1430 is expansion, then 45 is non-expansion. That's what we observe. Yep. Right here you see the 230 non-expansion, then and right here if the 1430 expansion, then 45 forgot about it. But if the 930 is the non-expansion, then looking for the 45. Right here. So here what we see so far. So if the 14 expansion and 45 non-expansion, then looking for reversal or a a continuation. Basically going to be an expansion right here. Right, expansion. Expansion can be a reversal or continuation. All right, however, if we have another case right here, if the 14 expansion and the 30 minutes later expansion, then look for a 35, it's gonna be a non-reversal. However, if the 14 is non-expansion, and the rest 2 more candle is still non-expansion, then look for expansion on 45. So that's the idea. So that so far we summarize how our game plan for the FOMC meeting right there. All right, go back to today. Here is the screenshot we take on Thinkorswim beginning of the day today. That's the daily right there. And on the 15 minutes, somehow it messed up our layout. We put 15 right here, but somehow the chart go to 5 minutes. It messed up our setup, our screenshot there right there. But anyway, we fix at the end of the day. We did fix this. Yeah, we fixed right here. So we see some pattern in here. So at 8:30 they have a data release. I think it's retail something. Let's go to the calendar. Yeah, retail sales. So that is move up 8:30, and you see a perfect setup right here. You see expansion, retracement, and then expansion right there. First leg up, retracement, and next leg up. And right here you have a perfect setup right here at this level 91 right there. So we have test from above, break, and then it's gonna reverse. That is the type 1 reversal. We did go along here perfectly, and we hit our target with the 3R right there beautifully. And at 9:30 you see that it rate the high, which is the buy side. It likely it's gonna go back and rate the low, or at least in this case it touched the level there. So we target first we target right there, but we figure out that's not working out, so we exit around here when we short them. But they are beautiful setup right here. So right here in the real time we see the level right here, right? Test from below, break, and reverse of the type 2 right there. But it flipped. So the type 2 got flipped, so we go long, and we take advantage of this. So it's a beautiful setup right there. So very key for it to mark the candle after expansion move. Expansion, and mark the candle that after expansion move. Mark the high of low of candle, then watch how the algo do with the high and low. Then we figure out what the next move. Very easy. This is a candle after expansion. Very key. Alright, let's see the trade we take today. Alright, here the first trade we take, you see that? We go in at 2 minutes after the 9:30. We see the setup right there, beautiful right there, level right there. Test from above, break and reverse. That's type 2 reversal right there. But you know what? We only go with one contract. That's fine. That's as long as we saw the setup and we take it, then good for us right there. Yes, you see that? It's going and perfectly. Only 3 minutes into the trade, almost hit 15.23R right away. Beautiful, boom. So it's only 3 minutes. yeah, 3 minutes, we get 15 point right there. Very easy trade. So that's, whenever we see the setup, go ahead, take it. See how beautiful it do like that? It rate all the retracement right here, rate all the sell side. Beautiful light up right there. And this candle did not rate the high. That means it's a inside bar. Basically, it's a typical classic retracement, and boom, make the next leg up right there. Okay, let's see the next trade we take. Okay, here's on the daily, so we can see they're gonna hit this level right there. You see that level, it tests from above, tests from below, you're gonna break that. That's we. Okay, here's the second trade we take. Right here, it's very obvious a short setup. You see that? It's expansion, and then it's gonna reverse or retracement, at least reverse from here, or retracement because it take the buy side and then it tests from above. So definitely it's gonna be a short setup. Boom, you see that? So basically we add along, we see that fall out, we add you said we go in one contract, you see that the profit right there. So we add 10 contract. As soon as it hit the target, as soon as it make profits, we take out 10 contract right away. So we add in 10 contract, we take out right away, only delete one contract. Yes, that's the reason you see the profits jump right there. So basically we take profits around I think around 1,200 right there. That right? 700, oh, well, $800, yes. And then we last one contract remaining run right there. See that? And then we move to break even. And then after that we exit the trade. And you see that if we don't exit the trade, the next gonna be flip on right away. I think we go long right here, we may make mistake right here. Boom, we got stop out right away. So be careful right here. Don't go long right away, right there. And then we go engage short, boom, we got stop out. So those two trade, whenever you see this, let it clear out. Don't jump in right away, but at least we do just one contract. So 2 trade loss on the road, just one round. And here we go in short again, boom. So 3 trade right there on the road. And then here we go short again, and we know they're gonna rate this. So we add 10 more contract. Let's see how it work out for us. Boom. As soon as we have profit, you see that we take profit right away. And you see that we take 10 contract out right away. We add in, and as soon as we have profit, we take out. And we'll let another contract run, but then we take profit. We should, if we let it run, it can hit the target. But here we engage again. We only engage, I think we messed up a little bit right here. Yeah. But anyway, we messed up right here. We close right away. Basically, we hit the wrong sell and buy bottom right here. Right here we go long. You see right there, we thought that, okay, so test from above, break and reverse, and this test one more. So we thought they're gonna go and reverse retracement here, and then next expansion move. So go long. We have profit right there. We should take profit. I think we did take profit quick, very quick. And that's one contract run. Boom, it come back perfect. You see, so very tricky around here. As soon as you see the profit, to take it, because it's gonna be stuck here for a while. And I think we make mistake right here. Let me see. So we try short right here. We thought they're gonna go down and break it. All right, now we good. We have profit right there, but let's see if we take profit right here. Yeah, perfect. We take profit. So take profit quick and let one contract run. So beautiful execution right there. And then boom, we just close out the trade. And right here, I think we're a little bit greedy right here. We just go one contract, but Okay, so let me see if we take profit. Yes, we take the profits. All of that, that's good because right here you see the level already there. That's from below, break and reverse. That's type 2 right there. We take quick profits. Boom, if we don't take quick profit, we pay price right there. So we let only last one contract and it hit it top out perfect. Okay, and we got a little bit greedy right here. We try to go along right here. Let's see. Boom, we have some profit right here. Let's see if we take it. No, we did not take it. You see that? We did not take profit. We should take profit. And then we perfect file right there. But we have a little bit greedy right here. We thought, wow, it do this level, right? It do twice. That's from below, break, and then reverse. That's from below one more time and reverse. So we thought this time it's gonna be expansion, right? The retracement is done. That's the reason why we don't take profit right here. But anyway, we a little bit one step early than the market, and we paid the price right there. See that? We didn't take profits, and we ended up give back our game right there. But if we take the profits, we be perfect fine right there. So whenever we're not sure, let's take quick profits until we see a clearly flip, and then go long. So we short right here, we make mistake again. You see that? We short right here and we go in with big right away. We say, oh, if it flip right here, then it's gonna go down and take the low of this candle. So we make two mistakes in a row and boom, we hit back all out again right there. And now it flipped, then sure, this one have to be it. It had to be it. That means, you see right there, it's gonna be supposed to be down, right? It's supposed to be, but because it's break the level, it had to be down. But if flip the level, then for sure, it's gonna be go rally again, and exactly we go in. See that? So it hit our target right there. So we aim at just 15 point, which is PR, and hit our target. So we good. Yeah. After this trade, we're done for today. All right. Thank you for your time and interest. We're always grateful for this opportunity. Day by day and little by little, in every way, we're getting better, doing what we love. Then success come our way. Thank you and have a great evening. See you next time.